I missed out on the best stock market rally of all time. However, I did double my Forex account in the crash, so it's kind of not too bad. The thing that's really bugging me though is that I just kept expecting the stock market to correct, for it to go down, for it to, well, for the worst recession ever since the Great Depression. I kind of really did expect it to go down. It kind of didn't happen, as we all know. It's enough to drive a man to drink. Oh, sorry, it is fermented, I swear. Though the question is, where are we now? You see, the vaccine's about to come out, stock market's at all-time highs, and if a vaccine comes out, do you think the governments around the world are going to continue to maintain stimulus the way they currently are? And if they don't, what's going to happen to the stock market? Is it going to go up, sideways, or down? I will let you decide. Right now, I believe the stock market is extremely high, which means I believe it is a trader's market, not an investor's market. So me personally, I'm not investing in the stock market. I'm trading it, however. So in this video, I'm going to be looking at the MACD strategy from Trading Rush, like I have in all my previous videos, and seeing if I can plug it into the S&P 500 and see if it does in fact turn a profit or if it does not. The rules for this strategy are in the description. I'm using the Trading Rush MACD strategy for this particular video. The strategy is price must be above the 200 EMA and the MACD must cross below the zero line for you to get an entry. You can pick the time frame. I'm going to be comparing different time frames to see how it goes. On the stock markets, I do not personally trade it short, so I'm eliminating all short trades. I am only taking this strategy long. It's a little bit of a rule I have. I have discovered that every time I try to short the stock market, I am wrong. However, when I try to go long, chances are I'll be right eventually. So basically, I don't short the markets anymore. But David, you say, what happens if the market's crashing? Why wouldn't you short it? Well, I would trade something else. I'll trade a currency because I find it easier and safer to trade currencies against each other than I do to try and short the stock market. I just don't like shorting the stock market. I always get it wrong. So only trading it long for this video, and that's the only thing I really do with it. Here we are on the S&P 500 on the daily chart on the futures. For the last few months, as we can see, we have the large crash in March, followed by our mega rally of the century. I've selected 3 areas to test. I tried to pick logical areas for logical reasons you would actually get into trade with logical exits. So the first entry I have is straight after the break and close above this high. So on this bar here, this pin bar, which quite frankly would have freaked me out, but sticking into it, it would have continued up and would have exited on this next pin bar very close to the 200 EMA and pinning through this previous high. The blue square actually continues 1 bar past, so of course in my testing it actually goes to the very start of the next day when you drop down to the lower time frames. So it includes this full day. Okay, and the second one we have is up here. This entry is you're breaking above this previous entry, break, false breakout, close below, coming back, then break back up into it. The exit is on this pin bar here. The pin bar is right on the previous all-time highs where you could logically expect the market to just crash. The last entry I have is coming out of the elections. We have a break of this previous high. We have a break into all-time highs, a retest of this previous high here, and then it's gone long. The exit is on the first really big down bar in that sequence. Logical entries, logical trades, and let's dive down and check out the lower time frames. Here we are on the 30-minute chart for the first time frame from the 7th of April to the 28th of April. As we can see, it was quite an interesting time to trade. Kind of sideways when you look at it, but some very good entries and some terrible entries like this one here. Another awesome one, terrible, and this one is actually an entry which I did record but didn't put on for this particular film for some reason. Overall, we can see lots of good trades. The trades that went well seem to have gone massively well. The trades that went badly very quick. You could potentially win a lot more of these trades. Like we got 1, 2, 3, 4 losses. If you had increased the risk percentage to another 0.5%, you would have saved. Would have got yourself 2 more wins, and increased the losses by 2, saving yourself a whole 1% in losses. Just something to notice. Okay, so the results across all the time frames. From the 7th of April to the 28th of April, on the 1 hour chart, we had 3 wins and 0 losses for 4.5% profit. On the 30-minute chart, we had 3 wins and 4 losses for 0.5% profit. And on the 15-minute chart, we had 9 wins and 5 losses for 8.5% profit. On the 29th of July to the 7th of August, on the 1 hour chart, we had 2 wins, 0 losses for 3% profit. On the 30-minute chart, we had 4 wins and 0 losses for 6% profit. And on the 15-minute chart, we had 5 wins and 5 losses for 2.5% profit. From the 23rd of November to the 8th of December, on the 1 hour chart, we had 2 wins, 3 losses for 0% profit. On the 30-minute chart, we had 6 wins and 4 losses for 5% profit. And on the 15-minute chart, we had 5 wins and 5 losses for 2.5% profit again. So does this strategy work on the S&P 500? And the answer, I believe, is yes, especially on the 30-minute and the 1 hour time frames. However, on the 5-minute time frame, I believe, or 15-minute time frame, I believe is a bit shaky. I didn't even look at the 5-minute time frame. In some of my previous videos, you might remember when I was trading the Euro-Yen, it worked extremely well on the 5-minute time frame and the 15-minute time frame. And though it was positive on the 1 hour, it just didn't give you any trades because the market was so steep. In looking at Bitcoin in my previous video, I was quite surprised with the results. I thought it would be absolutely awesome in all the time frames. However, it wasn't. It actually created a string of losses, which is based on the market structure. Bitcoin seemed to accumulate in long flat sections before breaking out and accumulating. Like, have a look at this chart and you'll see what I mean. Lots of accumulations, breakouts, accumulations, and breakouts. For the S&P 500, I didn't find the accumulation breakout structure that Bitcoin had. It's much more tradable. I don't know why. Maybe it's just a volume thing. I am not sure. Either way, right now at the top of the markets, I am trading these markets. Whereas in the troughs, that's when I'm looking to invest. That's just something I am trying to do with the capital that I have available. Basically, trade wisely, guys. Use your own head. Don't listen to anybody on YouTube. And if you found this video useful, please like and subscribe. I am really noticing my channel's doing surprisingly well. So thank you for the people who are enjoying my content.